Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, December 11th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the daily time frame of the ES today. Rollover gap up for the futures here, and you can see inside a super narrow range over the last several weeks, and gapping up here on the rollover above the third standard deviation above VWAP. This is year-to-date VWAP. That's your third standard deviation above it. So to be above that level right now shows how overvalued price is currently. The last time we were at these levels here in the ES was here earlier in the year. Ended up being the high of the year so far until today, where we've gapped up and taken it out. So very, very, very narrow range in terms of actual price. 14.5 points of range. That's 37% of average. Obviously, a big rollover gap up takes us way up here. But a failure to hold 46.50 could open up a fill of the gap. This remains a very bullish market, so even if we fill back in here, we could continue to see a bit more elongation. The previous highs, we were looking for 46.34 half, took them out here, now at 59. These highs here, 46.34 half, taken way out now, and so again we could fill back into that level down below and perhaps even a bit lower if 46.50 is taken out. Still very bullish. We'll see how it plays out here early today. Sideways with an upward bias. We have big economic data points coming out this week, so today could be mostly range bound, digestive, again with an upward bias. We have 3-year note auction and the 10-year note auction here today, but that's it. Tuesday is going to be big. Prior to the RTH Open, we have CPI data, so big time inflation data Tuesday, and we have our next Fed interest rate decision on Wednesday. So we get the FOMC statement and the interest rate decision there on Wednesday. So we could have a high range Tuesday, Wednesday, and Thursday this week. Today could be a bit digestive and setting the edges ahead of what could be a higher volatility Tuesday through Thursday. All right, taking a look here at the NQ. You'll see right here NQ, very similar gap up, rollover gap up here on the futures. You have this narrow 3-week range that played out, now gapping up above those highs here. Again, we mentioned before, this market has been working higher toward the last level of resistance here. That's going to be about the 1660 level, 16.6 level. That's your prior highs. It's a key range high as well. 100% target from this key range right there. So there's a lot of confluence coming in at about the 16.6 zone. We could be looking at a continuation here. So still very bullish. As we mentioned before, no signs of real selling pressure or rejection. But we had a very nice coiled up range here that really provides a lot of energy if we get a proper breakout. Again, like the ES, if there's a failure here to hold the previous highs, we could fail back into the range and further go expanding range. That's what's been developing here. Initially was an expanding range with the upper boundary looking maybe something like this, and then the lower boundary looking something like this, and then maybe you swish back and forth here and develop. So if this thing's not just going to run off for an upside move here, we could continue to build out this range until proven otherwise. Taking a look here at crude oil. Crude oil is exactly flat at the moment, perfect doji bar. This one's recovered the previous year's low at 70.08, also the previous quarter's low at 69.69. It's still in a very, very clear downtrend, especially over the last several months. You also have a very clear downtrend in the very near term as well. The last couple of days it did pop here and trying to hold. Mentioned before in our trading room here that holding this pullback into 70.40 to 70.50 could be a near-term buy opportunity for bulls looking to stretch this thing a bit higher. Once price gets somewhere in the 72 to 74 zone here, it's going to be very interesting given the downtrending price action. Does it fall again and lead to another round of weakness? If not, we could be looking at something near the lows here of the month, but again, not the strongest rejection, so maybe we get a lower low failure or some other semblance of a strong low that could lead us back to value by the end of the year, maybe 78, maybe as high as 80 here early next year. So we could be looking for that late year bounce, early year rally that could take us up, but trying to find a strong low down here first. Until then, we're still trending down in multiple time frames, including the medium and short term. Looking at gold, you're looking at gold here with a strong rejection. Major day one rejection. That rejection, as we've mentioned before, could be one that holds for another year. We've seen some of these strong highs like that hold out for multiple quarters. The last time we had that high that was taken out here at 2085, that was from 3 years back. So this one right now, super strong. We've now dropped away from that high tremendously. We're back toward the 2000 level here. We are testing a lower trend line now, and we have had an uptrending channel that's developed. So to hold at this level here, 2000, could give us a little bit of a bounce that happens, and then we'll see how it develops from there. 2080 remains the big time level though, right? 2080 is big time resistance. Prices above that, we just don't see it stay long in terms of acceptance. So if we pull back, anything between 60 and 80 could be sold still until proven otherwise. So let's see if we get a little bounce here off of 2000 and maybe bounce back into the range a bit. A failure at 2000 opens up a continuation down to value, which we have at about 1950. Looking at the YM, YM has maintained a super bullish trend. Very, very clear 6-day narrow range, about as boxy as it gets for a 6-day range. Gapping up on a rollover gap here and almost to the next edge above. Incredible that we've moved across this distribution the way we have. Very unique, but here we are very close to the previous year's highs at 36,800, another 800 level. The recent 800 was 35.8. It pushed through that level, held, and now here we are very close to the next edge. And the way we've done it is about as unique and as bullish as it gets. To reverse off of the 32.8 with a strong failure and reversal and quickly rally through 33.8, 34.8, 35.8 and straight to the other side. That is basically the range for the year, and it did it by pushing through those multiple distributions in huge fashion. At some point here, you may see this thing build a range or pull back. It's had so much elongation here that it likely can't continue to extend at this pace. So at some point, perhaps once we hit 36.8, we find some sort of semblance of a rejection that brings us back into 35.8, and it could build out here and maybe make its way back toward value. But right now, big time strength overall, coming into major resistance for the year, 36,800. Keep an eye on that level here. We'll see how it develops off that zone. Right now, super, super narrow intraday range, as Monday could be mostly digestive with an upward bias, heading into Tuesday's inflation data and Wednesday's FOMC statement and rate decision. All right, that's it for now. Let's see how this develops here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.